All right, then let's get into the conversation. I will just run through a very brief, I mean, it's a slightly longer presentation about fintech in India and China. I want to go through it quickly, but if you do have questions while this presentation is on, please feel free to chime in. If you have any thoughts, anything you want to counter as well, I'm more than happy to take that. And as I said, I want to make this interactive, so I will run through the presentation, not necessarily focusing on it full time. And then we can take it forward from there, right? Here we go. Can everyone see the deck? Right. So just a quick introduction. My name is Musheer Ahmed. I'm one of the founders of the FinTech Association of Hong Kong and also the founding board member. I am a managing director and founder of FinStep Asia. FinStep Asia is an advisory firm focused on providing innovation and growth advisory to startups, corporates, and governments. We work across Asia and help companies go cross-border in Asia as well as come into Asia. We were established 7 months ago, and as you can see with our logo, we are very much about bridging the India-China bridge through Hong Kong. Now, I'll start off with India first because I feel not much tends to be spoken about the Indian ecosystem, right? So the Indian ecosystem has been flourishing, has been growing quite rapidly. India, as you know, has a 1.3 billion people with nearly 440 million millennials, a very young population, right? So about 700 to 800 million people in India are below the age of 35. That's a significant human capital. In terms of age demographics in the Big Ten economies, probably US is the only one that comes close, right? GDP growth, despite the slowdown in 2019-20, is expected to climb back up to 6 to 8% in the coming 5 years. Internet users has rapidly increased to and expected to reach 720 million by end of 2020. Forgive that error on the date. And currently,
to outside confirmation. Yeah, if you look at a lot of the things that are happening now, it's all basically I need to be validated from the outside. My work needs to be validated. My message on social media needs to be validated. My picture needs to be liked and all that. So everything is outside validation. Whether the true value for the future is all about self-worth. Yeah, how can I be in sync and how can I be in peace with myself and with nature? I think this is the big transformation that we will move from. We will need to move from digital transformation that everybody is now still in, or we still think that this is the ultra economic savior for all of us, towards personal transformation, meaning digging deep inside us and connecting to ourselves in order to find peace and value with ourselves.
Paul, is this a message for this group? Is this meant to be for this group?
This society of control, this society of addiction also leads to a lot of burnout, 50%.
Yeah, I think that was probably an overlap from another meeting room from Paul there, right? My apologies on what was happening there. So just to cue back, right? The Indian internet users is about likely to reach 720 million users by end of 2020. Currently, it's tracking at 640 million active users in March of 2020. Now, that's a pretty significant jump from 3 to 5 years ago, where we were under 300 million in total. One big driver of that is our data usage. It is, and the cost of data, it's among the cheapest in the world, less than 26 cents per GB, right? I think it's the cheapest in the world by far. And Reliance Jio has been playing a big part in driving this inclusion. And I use the term very rarely, the democratized data in India, and that's driving a lot of digital adoption and ability, right? Now, the number of active internet users residing in urban India and rural India is almost the same now, which is good news, because earlier, as of last year, the number of rural users to urban users was lower for a number of urban rural users, and the rate of growth is also quite significant for rural India, right? Global startup ecosystem, India is the third largest. Digital economy is expected to grow over $1 trillion by 2023, which will be at that stage of 25% of the GDP. And but on the other hand, when you look at things like wealth, only 2% of Indians invest in market traded securities, and only 12% of Indians actively use online banking, right? So that's a still a significant gap in financial services being offered through digital solutions and the usage of the same. Financial services market is likely to grow at 2 to 2x, 2.5x of the real GDP growth. And in terms of fintech adoption, India does have the highest adoption in the world. Now, that's an EY metrics that looks at people who have a mobile and smartphones and access to fintech and amount that they use. So India and China are tied around 87%. Uh, and return on investments in fintech is projected at 30% over a global average of 20. We've also seen that the number of deals done in India over the last quarter have been more than that of China, of course, keeping in mind COVID-19 playing a role there. Snapshot of Indian startups, roughly between close to 9,000 startups have been incepted during 2014 to 2019 as per NASSCOM's report details, and total funding of startups in last year was over $5 billion if you take the 9 months down to September being 4.4. Quite a bit of institutional investors and over 300 active incubators and accelerators, which is pretty huge for any market. The Indian unicorns, again, third largest market for unicorns in the world and fast growing. We are expecting a lot more unicorns this year and next if things go back on track, right? So we have 18 unicorns, a mix of fintech, e-commerce, and others, edutech as well, like Byju's is edutech. But in terms of fintech, the ones that will strike you, it would be the likes of Paytm, as well as looking at MobiKwik, who all were established over 10 years ago. BillDesk is another new one that became a unicorn last year. Policy Bazaar being a marketplace, the marketplace in terms of information for policies and insurance is right there as well. Going forward, Udaan is the fastest startup in India to become a unicorn. Now looking at the ecosystem, just a quick run through. Our main regulators are RBI, which is the central bank, SEBI, which is the Securities and Insurance Authority. Key cities of fintech, Bangalore, Mumbai, and Delhi NCR. NCR stands for National Capital Region. And the Digital India focus is quite big. The government has been driving quite a bit of initiatives there. And of course, I'll talk a little bit more about Aadhaar and India Stack in the next stage. India Stack is digital infrastructure that has been built by the government and private enterprises together. It provides a presenceless layer which enables authentication and ID through Aadhaar, which is the world's largest biometric ID program with over 1.2 billion registered people on it. So it's a big, powerful tool that enables the paperless layer for eKYC, e-signature, and digital lockers. And of course, the cashless layer being driven by the unified payment interface in India, which has crossed $30 billion in transaction value as of March of this year, right? And a significant growth as compared to last year. Now, UPI has gone from 30 banks in 2018 to now, except with being tied up with over 150 banks and several dozen payment players in India. Now this is the India FinTech map as just a representative map of the main players. Main areas that you look at for FinTech in India are payments, personal lending and credit. That's quite large. And the growing space tends to be on the wealth tech side and the digital banking and insurance side. These are three main things. Some notable names on the digital bank are the likes of Open, as well as on the credit side, you've seen Cred doing some interesting and innovative things in this space with the credit card offerings as well. Number of new fintech startups, India ranked second to the United States in 2015 to 2018. And as I mentioned previously, the main hubs for fintech in India continue to be Bangalore, Mumbai, and New Delhi region. Now, Bangalore typically is the largest for fintech in India, and also the largest for technology in India, and the largest when it comes to funding in so far, right? Now, we often talk about the Indian demographics, and it's quite important to notice the differences in per capita income and urban versus rural. So, urban India, led by the tier one cities, which would be largely under Delhi, Mumbai, Bangalore, Chennai, Hyderabad, Pune, Kolkata as the main ones. You can see that roughly 110 million people in that space who have who are representing $1 trillion in GDP, which translates to 35% of India's GDP, right? And $9,000 USD per capita. Purchasing power parity, that will be much higher in any case. And you are seeing quite a bit of service for these people. A variety of fintechs have catered to their needs. Now the next stage is the India 2, as we people like to call it, which is another 100 million people who are maybe the urban middle class or tier two middle class with $3,000 USD per capita, do need digital services but not completely reliant on them yet. And their purchasing power will continue to increase in the next few years. The last piece is the next billion, as everybody talks about, or Bharat. So focusing on Bharat, which is rural India plus tier two India, which has still got a huge gap. One which is being covered by ability of them to have technology access through mobile data. As I mentioned, we're growing quite rapidly in that space, but still a while to go there. And secondly, ability to provide financial services for all of them. The government has a scheme where banking accounts have been provided for more than 500 million people in rural India who never had that service through the Jandhan account service. But we do hope that there can be more digitization of the same. Uh, Again, FinTech landscape, you can see that funded landscape. You've seen over 450 startups have got funding in the last few years, and has grown triple over 6 years, right? Another interesting angle for Indian fintech is how they look at global expansion. 96% of them are thinking about global markets from day one. And you can also see that Indian tech startups have been entering the global markets for expansion. A lot of them are B2B, and especially in fintech, you have over 830 B2B startups, with 230 of them being actively funded with a variety of use cases. FinTech also happens to be the first choice for serial entrepreneurs who have built multiple fintechs or startups before that. An example out here would be Anish, Kunal, and Jitendra, who have built Open, Cred, and consumer banks together, right? And a few others on the right. Now, I will take a little stop here, and if anybody has any questions around the Indian startup ecosystem, please feel free to ask me before I jump into the Chinese startup ecosystem. Any questions, any views?
Hello everyone, this is Saksham, and I just wanted to ask you, what are your views on the recent deal that's happened between WhatsApp and Reliance Jio? Like, we've seen how Reliance Jio has come in and changed the data framework in India. So now Jio potentially getting 400 million new users in terms of penetration to the rural India. How do you think that will potentially change the fintech landscape and the digitalization landscape of India 2 and India 3?
Yeah, it's a very good point you brought up, Saksham. For those who are not aware, Facebook recently invested close to $7 billion in Reliance owned Jio Telecom. who have been providing the data services and telco services in India. Now, that has been followed by some other investments by Silver Lakes and a couple of others. Now, Facebook has, India is Facebook's largest market, as is for WhatsApp. And Facebook has tried launching WhatsApp Pay over the last 3 years. They finally have got approval and have been testing or a limited release to 10 million Indians. But that's soon likely to be opened up in the next year, where they'll be able to offer to all their user bases. A combination of what will happen with Libra going forward, that could play a very big role in remittance markets in India through Facebook. But specifically on the Reliance Jio Facebook tie-up, there have already been talks about, or there has also been integration of Jio Mart, which is effectively the e-commerce grocery part of Jio, being offered through WhatsApp. Though the payments are still meant to be cash or collect, they soon, once WhatsApp gets their payments licenses fully active, you will probably see that being served through WhatsApp as well. So I feel that this tie-up bodes well for both Reliance as well as Facebook. There is probably an overlap of a few 100 million users between the two, but there may also be a significant difference in rural India may not have as many Facebook users as urban India does. And so Reliance reach in rural India will be a big bonus for Facebook and WhatsApp. Secondly, Reliance can leverage off Facebook's understanding of social ecosystem to offer more tailored products for the Indian diaspora. India is heading towards a major competition. I call it the next TechFin 2.0 being built up, where the large American giants, namely Google, Amazon, and Facebook, will build out their TechFin offerings. So Amazon already offers Amazon Pay. They already started offering lending through Amazon Pay Later. Google Pay is among the top payment apps in India, and they've also started looking at the lending space in addition to providing banking services through partners. And we've already spoken about what Facebook is doing. So this play is going to go in bigger when it comes to the e-commerce space as well, because Amazon has obviously their e-commerce play. They've put in $10 billion into India. Flipkart, which is now owned by Walmart and Amazon's biggest rival in USA, also owns a fintech player called PhonePe, which is one of India's largest payment apps. And then you have Reliance Jio coming in with Facebook as a combination for e-commerce. So I see that e-commerce will be a big play for digitization, and that logistical supply chain that Reliance offers will probably have a big say in who dominates the market going forward. Thanks, Saksham. I'll quickly move on to the Chinese ecosystem. I'm very conscious of time and don't want to run into the next person's session. So Chinese ecosystem is, similar population to India, but much diverse in terms of penetration of mobile, 854 million internet users, 300 million digital natives.
Musheer, I'm sorry to interrupt you. Before it took a little while for me to unmute myself. So I will be speaking next. I'm supposed to speak next, and you can take take as much time as you want, including my schedule, because I don't have a presentation to give. I'm just like talking. So the time is yours. Please enjoy and make the most of it.
Very kind of you, Gaurav, but I would not. I'll try not to infringe much on your presentation.
No problem.
Thank you so much for that offer.
Thank you.
So talking about the Chinese ecosystem, right? They have 850 million smartphones. That's a pretty significant number, and of course the largest number in the world. But that still means there are about 400 million Chinese who don't have access to internet, and that's where a major focus is now. COVID-19 has highlighted the various differences in the digital access for people in China, and the government is quite keen to bridge that gap. 90% of payments in China are facilitated through mobile, and about 600 million Chinese customers use mobile payment system. Now, the value of Chinese mobile payments was 40 trillion in 2018, and from last numbers, it's 47 trillion in 2019. right? It's over 100 times, 300 times more than the number for USA, which is it's the biggest economy in the world. So you can see that mobile payments are massive in the in China, and they're driving a huge amount of work. Internet purchasing of internet financial products is done by close to 130 million people, but e-commerce is a big play. Uh, Singles Day, which is 11/11, all one ones in the date, has been the biggest day for e-commerce globally. Alibaba alone has sold close to $40 billion of goods on that day, while JD.com sold close to $30 billion over 10 days leading into Singles Day. The number three player in e-commerce who not many people would have heard about is Pinduoduo. They use more of a community e-commerce uh, methodology, but they are now very close to being the second largest e-commerce player. They leverage of the WeChat platform, which is all encompassing when it comes to fintech in China, including dominating the payment space with Alibaba. Um, Now, user penetration we've seen has grown, and online lending has been pretty strong, though the regulators came in with more regulations in 2018, leading to a big clampdown and reduction in the number of fintechs offering lending in China. Interesting stat on average time for unicorn in China is 4 years, while in the United States is about 7 years. And of the unicorns in China, 46% of them make it through within 2 years, and quite a significant number of them going for listing, which is very unique to the Chinese ecosystem. But it also shows you how you can rapidly become a unicorn in China if you have the right product and the right distribution model, especially if you can leverage off either Alibaba or Tencent's platform and ecosystem. So top fintech players, you can see Alibaba, Tencent, and Baidu have played a significant role and offer services across different financial services verticals. And now you're also seeing Ping An enter the play, though Ping An being a financial services player is entering on the tech side with One Connect. So you're seeing the move from fintech to techfin on them, while others are have moved from technology to techfin. And financial, of course, the world's most valuable fintech, valued close to $170 billion as per its last raise of $16 billion in 2018 and early 2019, if my memory serves correctly, which is more than, I think it falls under the top 5 bank valuations in the world just by its current valuation. I've spoken about this. Now, the platform economy is very, very interesting. Each of these two, Alibaba and Tencent, have over 50 different services on their platforms, and WeChat has gone on to offer what's called mini programs, where you can embed applications on the WeChat platform for a variety of use cases. So that is keeping the stickiness very high for these players and enabling them to offer financial services on top of that. As I mentioned about mini programs, you can see that financial services offer a significant number of programs there as well. Now, the Chinese economy has been very well known to be cashless, largely the urban economy, and 84% of people are comfortable going out with no cash. A survey done before has shown that about 70% of people are very comfortable to go more than a week with only 100 renminbi, which is roughly 1,000 Indian rupees or about 15 US dollars. So very tech savvy, very happy. They don't run out of juice on their phone because every shop has can lend you a boost for 2 yuan an hour. So you do get no difficulty in using electronic systems. And in terms of the payment breakup, 40% of the market uses WeChat and 54% uses Alipay. In terms of consumer, you probably see a lot more from peer-to-peer percentage skewed towards WeChat. Right, as you can see here, WeChat has been growing, but Alipay still has a slight advantage over WeChat Pay. Another key element that I want to highlight, a difference between US and China, has been the investment of VC capital into other startups. Whereas Facebook, Amazon, Netflix, and Google overall have only contributed about 5% to 10% of the VC investment in US. This numbers are of 2016, but it's not changed significantly since. In China, you see that close to 50% is invested by Baidu, Alibaba, Tencent directly in terms of acquisition, or by alumni of Baidu, Alibaba, and Tencent. So they have a significant interest and active participation in the startup ecosystem, which keeps them well embedded. It's another way of borrowing on the Naspers play. Those who are not aware of Naspers used to own up to 33% of Tencent. They are a South African firm whose valuation is close to 50 to 60 billion dollars on their own, but their holding of Tencent is much larger than that. A similarity to how Yahoo owned a lot of Alibaba. But Naspers does do a lot of investments in other companies as well, have a significant say in India as well as in terms of investments. And Tencent and Alibaba have followed that playbook and invest in quite a few startups, including the big startups like Didi, Kwaidi, and large ones in India and other parts of the world, to continue being invested beyond their traditional service offerings. Here's a look at, so Alibaba was 2018 Q2, as I mentioned. And this is a chart that shows that Asia's dominance of VC investment backed by China has increased significantly over the last decade as compared to where the US was dominating as far as 2013 was. Top fintech investors led by IDG, Source Capital, Sequoia. SoftBank also has a bit of say in some of the companies, but a lot of them are local as well. Fintech unicorns, much larger, but this is to show that how Chinese fintechs are taking over and leading the efforts when it comes to global dominance in unicorns. Regulatory bodies, PBOC, CSRC, CBRC, and CRRC are the main ones. And you've seen some consolidation in the regulators. But one interesting aspect of regulators has been the government left policy space for innovators to experiment, right? So this is an example of Alibaba and their service offerings. And when the regulatory cap came in, when it came to money transfer cap, it took 11 years before there was a new cap imposed by the government. And the latest one in terms of barcode payments, it took 5 years. So basically, China allowed innovation to foster until it became systematically important, and then they brought in the regulation. So because a lot of regulations in China have been evolving as compared to the Western world, where they've been seeped in decades of economic growth, Chinese regulations have been more conducive to flexibility. Although being able to build fintech firms in China as international companies is a difficult proposition because of heavy restrictions. That's why you see a lot of international firms in India. But even otherwise, for local firms, they've had some leeway to continue to build their ecosystem while the regulators evaluate their impact on the market. Quickly touching on Hong Kong, my home base as such. Here you can see fintech has grown threefold over 5 years. A good split of female to male entrepreneurs in fintech here. And you can see with it being one of the freest economy in the world and one of the most competitive economies in the world, very attractive for fintech, largely for B2B play. It also plays a big role in the Greater Bay Area, which is an area crafted by between Hong Kong, Macau, and 9 cities in the Guangdong province, meant to be a way of integrating mainland Chinese and Hong Kong from an economic perspective. A lot of things are being placed into that, and the policy is supposed to be fulfilled by 2030. Comparison of the GDPs, the Greater Bay Area's GDP is almost close to the GDP of the top 10 economies. It's close to $1.6 trillion right now, projected to reach $3 trillion and $4.6 trillion by 2030, where it will be in the top 5 economies in the world. And you can see that population-wise, it is quite significant and a big up on both Tokyo and New York and San Francisco. Lastly, I'm going to close with how India and China have been, there's been quite a close interaction between the two startup ecosystem, predominantly China into India, both from deals perspective and investment. Although the recent government ruling in March of 2020, restricting Chinese capital investment from a direct investment perspective and having to get approvals from the Indian government is going to slow down investment and going to prolong the duration for the time taken for fintechs to, I mean, Chinese companies to set up and invest in India. We still feel this will continue to grow. And you can see here's an example of top deals and investments that have taken place in India over the last few years from China, right? And some significantly large deals, such as multi-billion-dollar deals by Tencent and in Ola and Flipkart. Alibaba's investment in Paytm has been, very well known, which started in 2002, in fact. So they've had that influence for a while. Here's an example of Chinese companies setting up in India, large, and it's spread out. Quite a few number in the electronic space. Xiaomi, as you will know, is India's largest mobile phone manufacturer and seller, closely followed by Vivo and Oppo as well. And you continue to see the likes of Fosun Group, Tencent, etc., set up their VC arms in India and continue to invest there. I'm gonna skip through this. Here's my email and our website for any further information. I'm also available on LinkedIn for any of you that may want to connect. I thank Gaurav for being kind enough to allow me to extend by 5 minutes. I won't take too much of his time, and I will allow him to, start his session. And if any of you have any questions, please do reach out. As I mentioned, I'll also type in my email on the chat group so that everybody can get in touch with me. And as I said, I'm available on LinkedIn as well. So thank you all. And I will now hand over to Gaurav. Any of you who would like, as some of you mentioned, you're looking for slides or a discussion, please ping me on my email and we can have a chat. Thanks.
Thank you, Musheer. It was very, very clear.
Thank you.